Hello Elliot Trader, this is Green Cross Paddy. Been watching your videos for some time. I'm most impressed with the quality of your presentation. The one video that caught my eye was your remarks on the Equity PC ratio index. And this is an indicator I've looked at over the years, and it has proven to be quite a good indicator. Sometime since I had a look at it, so I decided to go on the CBOE website to download the historical data of that index, and you can do it yourself if you go on there and download it into Excel as a spreadsheet, and then use the graph function to create your own graph of the CBOE index. I did a chart for each year and then stitched it together in Photoshop, which you can see here. And above it I have done the S&P 500 stretched out across the top. If you just look at it over the years, obviously we go through bearish phases and bull phases, and bearish phases and bull phases, and when this peaks and we get these spikes up, this is indicative of a bearish market. So you can see since the bottom we're in a very bullish phase. There's no great spike in put ordering, so just a bit of caution, although I'm going to talk about these red indicators being sell points. When you're in a major bull phase, it's not wise to pay too much attention to the sell points from making a lot of money, because they tend to be shorter moves, and as we all know, we should trade with the trend. Now, if I look a bit closer at these for you, we'll just zoom in to the first year. Here we've got 2004. The first big indicator, and this is, if you want to look for these indicators, we're looking at, as E.T. mentioned, for the bearish warning signals, it's when it's over bullish, and for a sustained period you've got an over bullish tendency to buy calls, and you can have the odd day where it goes bearish, but for some time it's over bullish, which is a contrarian indicator. You should be looking at a bearish forecast. So as you can see here, we had a bearish signal, and it did materialize. There was some selling in the market. So if we'd have entered at around this point here, and I'll talk about this, you should be waiting for the market to have some puts being ordered back out of this trough. When the market comes out, that's your time to get in. So you could have entered the market here, and you'd have made some tidy profits over that period. And similarly with the bullish indicator, which E.T. hasn't talked about, but it does work very well. If you look for a sustained period of over bearishness over 0.8, that's the kind of mark that I've been looking at. So there's a low density of days where it's below 0.8, and you can create yourself a signal there, and they're quite accurate. Some people have used these spikes up in over bearish days as bottoms in the market, and they can work, but this is a more reliable way of looking at things, looking at over a time scale density of over bearish or bullishness. Going into 2005, we had a lot of sell signals here again, and the interesting thing to look at is the first signal we get here. This is the density, but you'd have waited for this period here where it seems like you're coming out of this trough. You could have entered the market here, and you could have sold here. You could have covered your shorts here, so you'd have made profit on those. And again here, coming out of that, you probably would have entered about here. You could have covered at a profit here. So all of them have generated profit, and this is true if you carry on. Here you'd have entered the market around here, and again it would have taken a bit of patience, but you could have covered your shorts here. The buying signals are a lot more accurate. Here, over bearish, big profits available there, and then you could have could have sold your position here when you get the sell signal, and then it worked very well in this period. Good sell signal there. This is the most bullish signal that we've had, and this is logical because everyone was looking for a bottom in the market, and you did get some profit out of that signal. This is the worst signal in the whole of that almost 10-year period, sorry, 7-year period, and this was where everyone thought that we got to a bottom of the market, and the market just trounced everybody. But as you'll see, all of the indicators that we've seen, they have at least broken even, and you'll see, although this would have taken you 18 months to wait, the market is coming back to a break-even point there. So I think this is interesting because everyone who might have entered the market there as a buy, who held on, is now waiting to break even, and they will be getting out of that position when the market returns, and just waiting for heave a big sigh of relief. Now we've got 3 sell signals here, and I'm just waiting here. It's a bit too soon to be entering a short position here, though you could have entered one here, and again that will come into profit according to the past record, so we will get sell off to at least that point, and we're just waiting for this to come back up out of the trough, and you could be entering a short there. But it is a bullish phase. We're going to have to see some much higher put buying for you to seriously think there's going to be a strong sell-off again. It could well be just a minor correction in this bull phase. I hope that's been of interest to you, and thanks very much for watching, and keep up the good posts, CT. I'll keep watching your videos.